Hello, Maverick traders. Welcome out to your market roundup October 2nd. Corey here with you. When we look at the markets, we always want to talk about what's moving the markets in today's price action and lately. We'll look at commodities, we'll look at the markets, we'll look at sectors, we'll look at various areas of interest, and then we always highlight some new trade ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So in today's market, it was really a risk-off day where everything got hit across the board. Equity markets down about 0.5%. The NASDAQ was an outperformer. Actually, if you look at the big tech names, Google, Nvidia, Microsoft, Apple, Amazon, they were all up on the day, but most everything got hit with the exception of large cap tech. Russell 2000, the worst performer as it has been all year, down about 2%. Oil down 2%. Gold down 1%. Just pretty ugly price action. And I feel like there was a market tell this morning. Last night, if you were paying attention to the futures on Sunday, Congress avoided a government shutdown. Now, that seems like good news, right? Okay, no government shutdown. Great. Stocks should rally. By the time we were ready to open today, this morning, the markets were already negative in the futures. And that told you when you trade poorly on good news, that is not a good sign. That just means that every pop, even some quote-unquote good news, will be sold into. There is a lot of supply still out there and a lot of pressure still on these markets. Advanced decline line, about 80% of stocks falling today, and the 50-period moving average keeps getting worse. Now there's 84% of stocks below the 50 MA. At a certain point, we'll get so far extended on that we'll be due for a rally and will no longer want to be negative, but right now it's just continue. It's relentless selling of late, and that's likely to continue. Now, as we look at the charts, we're in a consolidative mode where we have plunged since we broke the trend line that we had highlighted for weeks, right? You're in a consolidation. Watch for the break. When it breaks, it should move fast. It should be running 1,000,000 miles per hour, and that was absolutely true. It rammed to the downside big time, lost a couple hundred points, and now we're low basing, and that can't give you a warm fuzzy feeling because we're not even strong enough to really rally back up to the moving averages or anything of that sort. A low base is a bearish pattern. As we try to bounce, even for a day or two, there's still selling pressure, there's overhead supply. This market is still likely to test lower prices. The NASDAQ, slightly better, but that's about as good as you can say. At least it's getting a bounce. At least there's a little interest in buying. Do I still think it's going to roll over? Yeah, I do. Do I think it probably has resistance right here at this gap area? Remember, on a gap, where you gap from and where you gap to are the two critical spots, and we're struggling with where we gap to and still struggling there. We tried to rally up to it. We failed today, long upper shadow. I suspect this will roll over just about as quickly as it came up to that area. So pockets of strength in large cap tech. That's really the only place you see some real green. Costco, we're going to highlight. We highlighted it last week as a bullish trade. Again, very bad news, missed on earnings, and yet the stock recovered to finish positive on the day. Quote unquote, bad news, good price action. That is likely to continue to at least be an outperformer. Everything else hammered. Real estate, energy, utilities, all deeply in the red. Financials have a lot of red over here. There weren't many places to hide. Market outlook is still negative. I think we could see a little mini consolidation here, but that's all it is. The markets continue to see aggressive selling pressure at every opportunity of late, and that seems to be the path of least resistance. So highlights for bullish, neutral, or bearish trades. On the bull side, a couple of outperformers. Still more neutral on energy. That's been by far the best sector to the upside, but hasn't gone anywhere the last few weeks as we've expected. And then on the bearish side, more highlights, just as we did last week, just more stocks setting up, more stocks look ready to fall, continue to focus in that direction. So Costco had earnings, gap down, finished positive on the day, huge engulfing candle that swallowed up the prior three candles. If you're watching on that earnings news, that I think is a market tell to get in. Probably still goes higher, but just want to point out that great price action post earnings. IP, International Paper, here at least up near recent highs. You could make the argument it's in a little mini cup and handle or some sort of pattern, a little mini ascending triangle. Still looks like we could challenge higher prices. It's not great, but it's better than most. Clearly better than 90% of stocks out there. Energy we've highlighted as a neutral trade here for the past couple of weeks, and we're still in that neutral bound around 90. Now, does today break that because you broke the 50 MA? I personally don't really think so. I don't think it's going to get carried away to the downside. You could see a little more selling. This could be a little ABC style correction, but probably comes back up out of that. So I'm not super worried about too much getting carried away here. I think we're still in that wait and see consolidative mode in energy. On the bearish side, Intap, NetApp, so NTAP, what do we have? Inverse cup and handle, small bounce after a retest of that support, should go back and through those lower support levels. So it's sort of like a ball dropping on the table. First bounce is a big one, subsequent bounces are small until it finally rolls off and falls off the table. Similar to how the S&P broke out of its symmetrical triangle lower and went aggressively, sharply lower, this could do the same. Snowflake, similarly, we've now retested the support and we bounced, but the first bounce on that support was big. The second bounce smaller. Again, I'd anticipate not only a retest of those lows, but a plunge to lower lows. Now, importantly, I don't think this is so much Snowflake specifically a short-term trade. This wouldn't go down and break that support within the next week or something. Probably have to give that a month or two if you're targeting a move down into the 130s, but that seems like where we could go big picture. Markets are out of the consolidation. The symmetrical triangle was broken and broken hard to the downside. We've got payrolls on Friday. The Fed's two mandates are price stability and full employment. They still have the employment picture they want to see. They're battling it out with inflation. That continues to be the case. We'll see if payrolls are giving any ground, any reason for the Fed to be worried about the payroll situation. We're past earnings. ConAgra, Constellation, we're really past earnings mattering at this point. So now it's trading technicals, it's trading economics, it's trading other things until the next earnings season arrives. Hope you enjoyed this market roundup. Have a great rest of your day. We'll see you next time. Goodbye, everyone.